Welcome to Drill Down Earnings. We have quarterly results out from Taiwan Semiconductor. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. This might be the one, this singular most important company in technology, because Taiwan Semiconductor, massive company, $1.3 trillion valuation, but they make the semiconductors that make technology work. In particular, the GPUs sold by NVIDIA, the chips that go into the Apple iPhones. This company, again, is the chip maker for the world. Q2 earnings a little bit better than Wall Street's estimates, with $30.07 billion in quarterly revenues, $2.47 per share in quarterly earnings. I don't know that the per share numbers really mean anything, but it does tell us that their profits were a lot higher. When we start to look into the numbers here, we see just a fantastic growth. This was a huge business a year ago. Well, it's 44% bigger now. Again, $30.07 billion in revenues in just the quarter was 47% bigger than it was a year ago. And fantastic profits margins of basically 50%. Profit margins, not gross margins. Very, very profitable business, even as it grows at scale here. And the driving part of this business, when you look at the revenue blend, high performance computing, they call it HPC over there, 60% of revenues, smartphones 27%, but 60% of revenues in high performance computing. That's both chips that go into PCs, but also, of course, graphic processing units. And when you look at their processes by which they make these chips, you can see that the 3 nanometer, their sort of most advanced process right now, is already 24%, a quarter of sales in the 3 nanometer business, showing how big AI chips are within that high performance computing world. For this company. And the HPC business is just cranking, specifically up 67% on a year-over-year basis. That's just jaw-dropping, and again, massively profitable. And the smartphone business starting to come back. They said next quarter is going to be even better, but smartphones up 18% on a year-over-year basis. That's good for this company here. And again, when we look at 3 nanometer, that wasn't a business that even existed 2 years ago. It's increasingly an important part of what they sell there. It's the new thing at Taiwan Semi, as is there's always a new process coming. 2 nanometers on the horizon here, but 3 nanometer now a quarter of sales for this company. How did the stock react? Well, it reacted, I think, more to the conference call. We'll talk about that in just a second, but the numbers were good, but the conference call was super bullish. And as a result, the stock was at 4% after the call when the US market started open to trade the stock, and up 44% in the last year. And these guys are growing, and they're growing all over the world now. They're growing in Dresden, in Germany. They're growing in Japan. They have facilities in China. They're also spending a lot of money in the US, and they announced in the conference call they're going to accelerate that spending in Phoenix, in Arizona in particular, where they've committed to spending $165 billion, $100 billion of it yet to come. And they say that's going to happen a lot faster now, which will lessen the effect. So Taiwan Semi earns all of its revenue in US dollars, but their expenses are in new Taiwan dollars, the NT. So the NT dollar, as that has strengthened, the US dollar has fallen, their expenses, of course, look more expensive, and their revenues look less valuable because the dollar has been falling really dramatically because of US trade policies and all kinds of reasons of investors pulling their money out of the US. So the fall in the US dollar effectively raises their cost, and yet, despite that exchange rate headwind, CEO C.C. talked about the bullishness about what's happening, and their expectation of gross margins, in spite of these headwinds, will stay strong.
The impact from the exchange rate is huge. But you try to imply that whether we are still our value. Let me answer that. We are working on it. And we have confidence that the 53% gross margin and higher, I still want you guys to pay more attention to and higher.
So he says, pay attention to higher? Sure, we'll pay attention to higher. We do what he says. But it's interesting what's going on with this company, because they really are profiting when this company is doing so well, and yet they're really raking in the profits, not really trying to just grow market share at the expense of margins. Well, what's it all mean, though? What's the one number there we want to remember about this quarter from Taiwan Semi? What's the drill down earnings bite? We have all that. Well, Taiwan Semiconductor second quarter earnings, a really impressive quarter from this company. $30.1 billion or $30.07 billion in revenues. Super impressive, fantastic 50% operating margins in the second quarter for this company, and announcing plans to expand even faster into the US spending over $100 billion to build out some facilities in the Phoenix, Arizona area, as well as expanding in Japan, expanding in Germany. But they're growing globally, all driven by one thing, and that's the drill down earnings bite. The one number that tells us a whole lot is that they saw 67% growth in their high performance computing, their HPC business. That's PCs, but it's really graphic processor units, and that's what's driving chips from NVIDIA, chips from AMD, chips from other semiconductor makers, just growing fantastically for this company. Their most profitable segment growing at 67% at Taiwan Semi. All right, thanks for checking out Drill Down Earnings. Follow us on the socials, subscribe to us, check us out on X at Cory TV, and of course on TikTok, Instagram, and on YouTube at Drill Down Pod.